I think we should get right to the questions since this is the question of the hour for us. And it is the next financial crisis coming? Is it coming soon? And especially in this part of the world. And if not, why do you think not? What kinds of factors will stave this off? So we'll start with you, Iris.
All right. So for me, a financial crisis has at least three factors. One is very, very fast credit growth, and then it comes with a liquidity squeeze, and then everyone discovered that the credit quality underlying the assets are very poor. So nowadays, we don't have these three factors, at least not in China. For example, credit growth has slowed down from January to February. And then liquidity is ample in China. Everyone knows that. And credit quality, they controlled it through different various regulations like clamping down the P2P platforms.
So you don't think this is near? You don't think it's near term?
No, it's not near. Maybe when we do again next year, we'll have a different answer.
Okay. And Alicia, is that your view as well, or slightly different?
I can't but agree with Iris. We've been working together in the past, so on this one, I'm absolutely in agreement. I think 2019, after a horrible 2018, it's going to be a good year. It's not going to be a crisis year. The reasons are very similar, but I would actually add that we have more oil, we have more oil everywhere. The Fed just realized that probably they didn't say that, but they made a mistake last year. If not, nobody would understand why they suddenly stopped, or at least they claim they will. Let's see. The ECB basically changed its mind as well, only recently. And China is just doing everything it can, including the PBOC, to get growth going. So, it's in a way, to see a crisis, we should have seen the end of a cycle, which maybe was long overdue because we had massive balance sheets everywhere. I would add China to this. And central banks and ministers of finance in the world have realized, not really, it's not, why end this nice cycle that we all started? So we are going on. Of course, this only builds additional imbalances down the road. And this is why, Iris is right. Do not ask me this question beyond 2019, because that's where I start shaking. 2020 is election year in the US. I think it's just very, 2020 might be too early.
Yeah.
But piling up, that's where we are all at this point in time. And that's 2021. Maybe that's when we should meet again and discuss this issue.
We'll keep coming back.
Yes.
Well, what about China? Let's talk about growth. What do you see? You're saying it's not a crisis, but what do we expect in terms of growth? What kinds of potential shocks could there be that could unsettle that?
Yeah.
And how about this deleveraging campaign? Do you think it's gone far enough? Do you think it's being done the right way? And how does that balance with growth?
I'll start with the last question. I think deleveraging has been shelved since October or even earlier in 2018 because Premier League has actually not mentioned the word deleveraging in the Politburo meeting in October 2018. This is one thing. So after they shelve deleveraging, you know that they will restart re-leveraging. So I believe that there will be credit growth, but not as those in the crisis like this one. So I expect mild credit growth like M2 growing at 8%. And if I need a word to describe the China economy situation nowadays, is softening. It's not really in any way a crisis mode.
Okay.
It's terrible. I agree on everything I said again.
Two economists, not six different answers.
Possible. Yeah. Well, okay, I agree. I would even go further, though, because I don't think China has ever deleveraged. And I'm going to make this point very clear.
Explain that.
We just published a note on this, and with every single data, if somebody doesn't believe it, I can show you. And yes, P2P, yes, trusted loans, yes, bits and pieces of the very complex shadow banking that China actually has. That has happened. But when you look at the aggregate, which is what matters, yeah, the aggregate, if you look at not only total social financing, but augmented total social financing with things that are not really there in the definition offered by the PBOC, it's still growing above nominal GDP. This is, as an economist, if my financial sector, financial assets grow above nominal GDP, this is still leverage. By any definition, you can. So this is on the financial side, let alone what's going to happen in 2019, as Iris mentioned. But on the real economy, which is what matters, because that's only intermediation. Complex financial sectors intermediate many more times the same real activity. So if you think about the US, credit to GDP, especially if you add capital markets, is massive. Yeah, maybe not Argentina. Well, we don't want China to be Argentina. So I don't have a problem with financial leverage as such. What I really care about is real leverage, i.e., the key sectors in the economy being households, corporates, and the public sector. Are they deleveraging? No. And this is easy to, these figures are available. But the leverage, i.e. the increase in debt, is changing in nature. Is actually the corporate sector is deleveraging slightly. Households are leveraging. And the public sector is leveraging pretty rapidly. So that's of course, compared to early, 2010, 11, okay, sure, it's a slower leverage path. The question is, how quick is it going to be in 2019? And Iris already pointed out to the fact that it will be quicker than 2018, by all means and purposes, because that's the only way to grow. And I think we'll see more of that. Is that, though, to not to look like, very negative, like a China hawk or something, which I'm not. Is that a problem? Not yet, whatsoever. China's sustainability, debt sustainability figures are better than probably any major economy in the world, because real interest rates are very low and nominal GDP growth is very high. So you can pile up more debt if that's the question. You can. But of course, debt, and this is not me telling you, Irving Fisher, just read it out, already said that a leveraged economy needs much more grease for every single unit of output. So this is Iris again. You won't have massive growth out of that additional leverage. You will always have less and less growth for an additional unit of leverage, because that's the way it goes when you're leveraged. So it'll have to happen, because that's the only way for China to grow.
Let's talk about the trade talks that are ongoing. Just today we heard from President Trump that he doesn't want to take the tariffs off, even if there's an agreement, that he's going to wait to do that. How does this play into the whole economic picture? And if this doesn't happen, if we see more tariffs, if we do see they can't come to an agreement, and the U.S. Goes from, 10% to 25% on $200 billion worth of goods, is that a game changer?
I think that is because that now it's more like going into the final stage of really confirming the details of each side, what to give in from each side. So China don't want to give in all from China and nothing to be given in from the US. So it looks really bad if that is the case for China. So they are really negotiating like one step forward and then one step backward. So I believe that it will be even later than the late of April. That was said in the news. So it is a long game, and I think is really damaging the export sectors and the supply chain, not only in China, but because the largest export part is electric components. So you see that it is affecting also Taiwan, South Korea, Japan. So the whole Asia is being affected from this trade war. So we are really looking for something to end this, but it will be really difficult.
Yeah, but you don't see this as being, even if this continues, you don't see this.
I don't see escalation of the tariffs. First of all, because I think that U.S. is very is refraining from itself from escalating tariffs because it knows that it is the last step that it can do. Otherwise, it has no chips on the table anymore. So I don't think that they will do this very soon.
Alicia, how do you think the tariffs and trade war play?
Different this time.
Okay, it should be, yeah. Otherwise, we're in trouble here. But no, it's kind of close. But perhaps I can expand and to make it more interesting. Well, first of all, I think, who is negotiating? I mean, basically, if you have somebody telling the negotiators what to do while they're negotiating, it's very hard to negotiate. So I think, first of all, on the U.S. side, it's not very clear what, whether this is just a negotiating strategy to ask for more. Why are they asking for more now? I mean, it's very complex. But what is clear to me is that once you've reined in, and this is the US perspective, China in a way or another, you do not want to let it go. And this is why you need to come up with more and more issues, whether it is, you may have misunderstood, it was all about additional tariffs, or you may have misunderstood. It is, so all of these misunderstandings are going to happen no matter whether we reach a deal or not. So there will be things that they thought they had agreed upon. And so I think we need to get used to a new normal, which is huge volatility related to US-China strategic competition. And once you put that into the equation, anything we see is just a simple sign of that. Would I worry about tariffs being maintained? Well, again, not really, in the sense that this is about a change in the level of prices. Yeah, it's already changed. It's already there. I mean, now, once you adjust to that, I think this is not the main problem. I think markets should react to other issues. For example, surely export restrictions. I think this is much more important to China. So the fact that you can't import high technology goods, either through Hong Kong, by the way, which is a major importer of these goods under the Hong Kong Policy Act. So watch out for that one. Can China continue to, in other words, is China's bottleneck on the technological side going to be how big? This is the question. How can the US manipulate that bottleneck, make it smaller? I think that's where the answer is, because it's not really about how many imports or at what cost. Because there's a lot of substitution that can happen from Europe, from Japan, meaning avoiding the tariffs. I think the question is, can China access the necessary technology, and this is the semiconductor industry being the most obvious one, let alone have the production in-house, because most of the producers are anyway foreigners in the Chinese semiconductor market. Can China continue to do that? Because that's the bottleneck. At this point in time. And I think that's where we need to watch out, really.
Let me add a line to Alicia's comment. What I believe and what I see is that China is not really in a bottleneck situation in terms of technology progress. Even without major components imports from the US and the other areas of the world, China is the first country to have 5G for commercial use on a countrywide scale, beginning at the middle of this year. So it means that if everyone blames that China is copying, China is not inventing by itself, I think the best example to go against this claim is the 5G example. So I would say that maybe it's not really at the bottleneck. Maybe it's the reverse, that the rest of the world are already in the bottleneck situation in terms of technology, and China is not. And then they are worried about the rise of China.
Interesting. Well, as long as we're talking about the world here, what external events, especially geopolitical events, do you think could speed up a crisis or could perhaps stave it off. I don't know, world peace is not likely to break up, but in terms of things that could make it come sooner, what about, for instance, Taiwan tensions and other geopolitical kinds of things that could affect China? Alicia, you want to take that first?
Sure. So there's so many geopolitical risks for 2019 that I don't know where to start, basically. You mentioned Taiwan. This is the obvious one. I think Taiwan is a binary thing, so it's not like a escalating risk. It's either yes or no. I mean, because it won't happen through negotiation, in my opinion. So, you basically wake up in the morning and this is the Cuba type risk that... and that's, we can't really protect from this one. But, there's others related to alliances, meaning, and you were mentioning 5G, I just came back from Europe, and, this is a big discussion there as to how Europe is going to react. And of course, Europe is a very fragmented reality, especially for this topic, because it's not a responsibility of the European Commission, but it's actually a national responsibility. So how are all of these US allies, we already have Five Eyes reactions, Australia, UK is different from Australia. Germany has kind of decided that it's not about countries, but about level of security. So everybody's coming with responses. So the question really is, what kind of alliances are we going to see beyond trade? Because, trade, this is the WTO, it's in, I mean, that's a different kind of issue that is also a geopolitical risk. But I'm talking about what kind of alliances are we going to see in 2019? We talked about Italy before, how Europe is feeling about this issue. Is it going to push Europe closer to the US? This is happening. We had last week already a position paper, a short one, 10 points, very clearly. Europe is becoming less keen or acknowledging that China is a strategic competitor for the first time. So I think this divides the world. It's a kind of I wouldn't call it a Cold War, because in the good old times of the Cold War, the world was divided, meaning it was not globalized. So it's very different, yeah? Now we're globalized and we need to cut pieces everywhere. And it's hard, yeah? Because for that one, you would like to be there, but for this one, you would like to be there. And how do you cut these pieces? So these are the hard decisions that countries will have to take in 2019. And this in itself is a massive geopolitical risk, because countries will it's like a pendulum. You will think they are here, but suddenly, because of something really important coming up, they move on. Yeah, and this is happening indeed in Europe. And I don't think it's the only country, because we had Li Keqiang talking about a North Asia trade pact in the progress report. North Asia, Korea, and Japan. These are supposedly U.S. allies, and Korea has an FTA with the U.S. Maybe not white and black and white poisonous pill there, but implicitly, yeah. I mean, are you going to negotiate an FTA with China after what you managed to basically to update your FTA with the US? Are you going to be able to do that? So all of these questions, I think, are the key geopolitical risks. Where is the map? I want to see the map. I want to see who is with whom, and it's so hard to tell.
Right.
So yeah, I guess this is more of not a binary as Taiwan. Taiwan is massive, but it's binary. I can't get ready. But I need to know when I work in a country, when I invest in a country, which side is it? I want to know that. Otherwise, I can't prepare. Yeah.
Iris, what do you see as the big issues?
I'm a little bit different from Alicia. I really think that Taiwan is the issue between China and US, and as you said, it is a binary. So it will be really just happen, and then when it happens, you think that, oh, it finally has happened, what's next? Then you don't know how to react. So this is the first thing. The second thing is that US is testing China's patience on US ships going through the Taiwan territory. So I believe that this kind of testing is that the US government may not have enough accurate information or accurate understanding of how mainland China sees that Taiwan is really part of China. So they are testing every time, and President Xi is getting more angry every time. So when it's like a mom and the kids. So the kids test the bottom line of the mom, and every time mom gets more angry, and then be patient, and then at one time it just blast, and then everything's gone crazy. So I think this is the biggest risk here in China.
Okay. We have less than a minute, so very quickly, what is your biggest worry? What keeps you up at night as an economist?
Well, I think short term and long term is all about the dollar, in my opinion. I mean, let aside geopolitical risk because I don't want to repeat myself. Yeah, but if you think about financial risks, short term is that the Fed suddenly realized, sorry, I was wrong. I'm like, again, this is a key risk because nobody is really thinking that the Fed could go back to a path of 2-3 more hikes. And that this would bring, of course, a massive reduction in dollar liquidity globally, which would clearly affect the region. So and China, because under stimulus mode, the renminbi could suffer heavily, and intervention would be needed, etc. So that's short term. Medium term, again, the dollar, but differently. It's really the weaponization of the dollar that worries me massively because everybody's getting ready to, quote unquote, substitute the dollar. And this is our, we like it or not, reserve currency. And that idea that everybody, including the European Union, thinking of an SPV to deal with Iran, I mean, it's like, when you read that, it's like, my God, I mean, everybody, including us, naive people in Europe, are getting ready to avoid the weaponization of the dollar against you. So, CIPS, China's international payment system, so many things happening. We won't see the impact of that anytime soon. But the fact that everybody's getting ready is building the pressure on the dollar. And let's not forget that 1/3 of those US treasuries are held by foreigners, and they keep on piling up as we speak because of a very lax fiscal policy in the US, which I don't think is going to change anytime soon. So because of all of that, I worry medium term about the dollar.
Okay. Very quickly, Iris, what keeps you up?
I think a small chance of regulatory mistakes will be very damaging. Let us not to forget that 2015 is a mistake made by the PBOC to liberalize the RMB very quickly. So regulatory mistakes.